And again, some really great tools for you to use on your business to promote Keller Mortgage. I think real incentives for your buyers. I mean, that don't exist anywhere else. And I'm going to stop talking eventually and let David from Keller Mortgage do all the talking and presenting. He's got a full presentation to show you everything. But you know, some agents in the office have already used it. It's a real opportunity to promote the special financing, quote unquote, that's available through Keller Mortgage. That's intriguing to buyers. Again, all the marketing tools and things are there. They're built for you. There's an entire platform for Keller Mortgage that you can log into and pull these things and use them. But again, I'm going to stop talking and let David do all that. So we got people showing up. That's great. I'm sure there's a few more coming through the waiting room. Everybody having a good day? Yes, Carl is, Julie is, awesome, Silva, great. Great. All right, David, people are still coming in, but we could probably get started. Let's be respectful of their time. And I know you can screen share, David, if you want to go ahead and show whatever you want to show, your presentation, etc. You could do that. Just need to unmute yourself, David.
Yes, sorry about that.
Yeah, great.
See if my hands-free were not connecting. Let me see if I can get them to connect one more time.
Okay.
Can everyone hear me?
Yep.
All right. These are still not working. Good old technology. Sometimes works, sometimes doesn't.
Oh yeah. Oh yeah. I know how that goes. This morning I was talking for 5 minutes and I was muted.
All right. Yeah. So let me just jump into this really quick. Give me 1 second. How do I? There we go. Share screen.
Yep.
Desktop one. Share. Oh, give me 1 second.
Yep, no problem. Here's a little side note, guys, a bit of news that we're excited about and we're gathering more information about it, but Keller Williams is launching its own real estate school. It's a very, very cool thing. One slowly but surely, I think there's about 20 some odd states that are already fully ready to go. The rest are said to be ready by the end of the year, where we're going to be able to offer real estate school to anyone who would want to become licensed in the state of Connecticut and New York for free, because the market center incurs the cost and you can invite people to do this. I don't know if we merged, if we purchased or what happened, but we're in business with one of the largest national real estate school trainers now, and this is real exciting news. So just thought I'd mention that.
Also exciting news for all of you is that we're also going to be offering discounted continuing ed classes through the KW School of Real Estate as well.
Totally.
All right. Is everyone, it says I'm sharing my screen now.
You're good. We can see it.
You guys can all see that? All right. Wonderful. All right. So I'll just kick through this. I know the most important thing in a lot of these meetings, these Zoom calls, is the question and answers, but I do just want to give you guys just a little just run through with this slideshow that we've created for you guys in terms of any Zoom calls we do. It's a little dated. I think this was rebuilt. Obviously numbers changed a little bit, but I think this was done in the very early stages of 2021. Basically, again, what is Zero Plus? It's an exclusive program for you guys to share with your clients with the main goal of basically there's two main goals or two main goal paths for this loan product for you guys. One is, what does it do for you as the agent? Okay, so I'll talk about that one first. Essentially, you are being able to provide your clients with a loan product that's going to save them thousands of dollars, discounted rates. You can see it on the right hand side of that slide, right? So you are presenting them something that they cannot get typically in the marketplace, And that allows you to differentiate yourself from your clients, which once you say close that home and close that loan, your clients are even more appreciative, and that word of mouth spreads even faster. Okay. Secondly, though, in terms of how the way we were set up, how does it benefit you? It benefits you in the sense that everything we do, we pre-approve all of your clients up front. Sometimes it takes a little bit longer, but getting that all completed ahead of time allows you to make sure that you're not out there with a client who is technically maybe not ready yet to buy a home. In fact, I'm working with a client right now with that exact problem. Got a lot of wrinkles, a lot of hurdles to overcome, and no matter what we do, we just can't get over it. This client was already ready to go, out and about with their agent, shopping for houses, putting in offers. They are not yet ready. We are able to determine that. It is going to take some time. We will get them ready, but it's something that's put in place to make sure that your valuable time is being, accounted for. Other things that when Gary Keller basically created Keller Mortgage was, we do everything geared towards getting to that closing on time with a firm commitment of that. And parts of the process that we do that eliminate delays, namely, we order appraisals on day one and get all of that part of the process going as quickly as possible, especially in this environment right now where appraisal turn times are getting longer and longer. Being able to order that appraisal right away. We do not charge your clients any upfront money. And so it's all just there to streamline the process and make it's going to be a stressful process no matter what you do, no matter what that client, how many homes that client has bought. It is always a stressful process, but we are here to try to mitigate that stress as much as possible, essentially. For your client, it's very simple. It's all of those things which help them get to a closing table faster, as well as the financial savings. We are going to waive all of our underwriting, processing, origination fees. They do not exist for your clients. Okay. So that's going to save them comparatively versus any other lenders out there. I would say probably on average of $1,500 to $2,500 in fees. In addition to that, as long as the loan size is $150,000 or greater, they get an extra $1,000 lender credit from us. In addition to, we are also typically discounted market rates as well. So we go out and we look at rates and we are constantly adjusting them to make sure that we are offering a very highly competitive rate. We do all of that because essentially we do not have any marketing. We do not have any advertising. Every lead, we do not pay for lead gen. Everything is coming through you guys, and all of that savings that we're not spending on that line item for our business process is getting kicked back to your client, again, with the ultimate goal of a better experience and more word of mouth for you guys. So I talked a lot on that one slide, so I might be kind of jumping through these pretty quickly. This is sort of I don't typically like this slide that much, but this is just a way to kind of quantify, right, the savings. This is typically against other lenders, in addition to the $1,000 credit that I've already talked about, as well as sort of what we discount in terms of the market rate. And basically this slide was just intended to kind of quantify that. I would say if you add it all up and just set it as a dollar amount, the clients are probably saving anywhere from $3,000 to $5,000, depending on sort of the purchase price. It's sort of a generic quantifiable number. It doesn't mean you're going to see a minus 1,000 or a minus 5,000 on a loan estimate or anything like that. But if you did comparison shopping, and we've been doing it, since we started, that's typically what you're going to see in terms of a comparable basis versus other lenders. What types of loans do we offer? So there are certain loans that we just don't do. There are rehab loans. There are, other sort of, very niche products out there, down payment assistance programs. We looked at all of those. We'll continue to look at them. They're a very small market niche, and we just felt like we would rather dominate and perform exceptionally well on the bulk of all the loans out there. So we can do basically anything conventional, Fannie, Freddie Mac, FHA, VA, USDA. We can do jumbos up to $3 million. And we can also do refinances as well, cash out or just rate and term. We can also do these on primary vacation and investment homes up to 4 units. So it is, in terms of that, it's your standard issue. But again, it's there so that because we know these are going to take up 95% of the market share out there. Basically, this is exclusive to KW transactions. Okay. What this means though is it doesn't just mean it has to be a buyer's agent representation. So I've done this. It doesn't happen a lot, but I say, me personally, I do about 1 every 2 months where you as the Keller listing agent recommend my services to a client who they're looking to put in an offer. Let's say they don't have a ton of cash to put down, right? They've got a little bit limited cash. Well, if I can save you, let's just quantify it and say $3,000 in closing cost fees, well, now you've got a little bit more to put down, or you can actually pay full price. It's slowed down a bit in this market just because obviously there's so many not cash, but there's so many buyers coming in paying a little bit over ask and all that good stuff. This is more in a normal market. This happens a bit more, but it is something that even as the listing agent, you're able to provide this loan service and still have that client, even though you're not the buyer's agent, take full advantage of all of those savings for that particular client. And again, it doesn't happen a ton, but it definitely happens more often than you might think in that sense. Again, this is just a slide trying to quantify. You would never see a minus 30, 3750 on a loan estimate, but this is just a way to try to illustrate how we might just in a conceptual basis try to quantify how much your clients are saving on each loan for an estimated $250,000 loan size. More value to your clients. Okay, we have grown into one of the biggest and best lenders within a very, very short period of time. A majority of the loan officers that work at Keller have already made it to the Scotsman Guide, which is it's the #1 trade magazine within our side of the industry. And so what you're seeing is, with your help and how fast this company has grown, we attract top level loan officers across the board. So that is something that's going to benefit your clients. You're not just sending, a lot of the questions I get is, this feels like a call center. It feels like just an online portal. My clients don't get any attention. They get full attention. They're going to save thousands of dollars, as we've already kind of talked about. There's a simplicity issue to this, right? There's technology built in to, and again, I know it changes names. It used to be just Kelly or Command for you guys. There's technology built into that helps communicate with you, which ultimately helps the client, because that constant communication update it just simplifies the process, where you as the agent kind of know where you are in the process, and the client is also then made quite aware of where they stand within the process. That, again, these are all things that were sort of pet peeves of agents with the lending side of things, and that is why Keller Mortgage was created. It was all in an attempt to try to remove as many of those as possible. I mean, we can't remove everything. We can't make it an absolute euphoric, perfect environment, but we have gone in and tried to eradicate or improve on the process flow on our side to make your lives that much easier. And with the ultimate goal, the client feels that those pain points are gone. Some more just bullet points on the value for you as the agent. Our pre-approval, basically, we are a partner, right? We don't want to just be seen as, just a fully autonomous third party. We are a partner with you. Our goal, we know how important it is to close that deal and to close it on time. And that is, that's the prime commitment for us in terms of making sure that we are getting those deals done on time with as smooth of a transaction process as possible. Again, as I touched on it, appraisals are ordered on day one. Again, that is there to make sure that we are maintaining our process flow as quickly as possible for you guys. And as long as we can get, this is something that we've evolved this over time. When we can get your clients pre-approved ahead of time, we can easily do a faster close period. So right now that evolves over different periods of time. If we were talking last year at this moment in time, we were kind of pushing back saying, hey, agents, it's right now, it is very tough turnaround times. Something less than 30 days is going to be a challenge. I'm not saying no, but let's push for it, but you got to be able to be flexible to push back to a full 30 days. We are back now to a more, but that was all pandemic driven. That was market driven with how many deals were in the system. That was a very unique situation. Since the beginning of the year, we've gone back to more of a standardized, and again, this sort of piece of the puzzle, it updates over time. But right now, if I have your client pre-approved ahead of time, and now you're out shopping for houses and you find the right house, and they're like, hey, we got to close in 22 days though, because the sellers are moving and we want to get this done. You come back to me and say, hey, can we close in 22 days? As long as they were pre-approved in our system ahead of time, we can absolutely do that. We will get everything ordered on a rush. We will get everything done on time. Everything gets put into our system in order for underwriting to review that file and re-review that file as quickly as possible. But that is something where faster turnaround times, even in this market, are still available. And that's a very valuable tool for you. It might help you win a deal or two over time. This is more for you guys. This is sort of your experience. So I wanted to kind of show, what this looks like for you. It is basically, there's a Keller Mortgage agent portal. Okay. Within there, you can do a number of things. The biggest things I like to highlight are sort of just the top four here. So you can refer a client, right? If you don't have a loan officer and you just want to send a client through into the system, this is how it was originally set up. In the very beginning days of Keller, you didn't necessarily have a preferred loan officer to be tied to. You would refer your client in, it would go, first person up, boom, it's getting taken, it's getting worked. If the client has finished everything, it's getting sent to underwriting right away for a 24 to 48 hour pre-approval time, turnaround time. A lot of agents said, hey, I don't want to just work with a different loan officer every time, which is very understandable. So they added a selection where you can select your preferred loan officer. So within the portal, you can go in, and if you do it one time, you only have to do it once. You can go in and actually select a loan officer that you want to work with. And then anytime you click on the refer a client tab, you plug in your client's information, name and phone number, it sends the link out for them to apply, and it's going to go to that preferred loan officer every single time. Okay. Another very valuable tool for you is, all right, let's say you've started using this, you've done a few deals, you've sent your next deal, and for some reason the client called you, they're just not sure where they are in the process. There's a reporting tool in here. I'm sorry, actually, my apologies. I thought back that up. So the reporting tool is actually for you to see where all of your deals are in line. So you'd be able to go in and see ahead of time. You don't necessarily have to pick up the phone or send an email and then wait for that response time. Those reporting tools basically help you see where each one of the clients you've referred into the portal, into the system, where they might be in the process. Within that, there's an SOS button, and that's actually where I was kind of going. There is a place where if you need management to get involved right away, you're pressing that button, and it is not just going to it's going to the loan officer that you're working with, but it's going to their manager and another level of management above that. That is there because, again, and it's not a black hole. You don't just press that button and you're in some, blank, customer service, limbo where you don't get a response forever. It is something that's very taken care of in a very, very quick amount of time. And then I'll touch on the marketing aspect of this because, I want to make sure that you guys can understand there are additional tools out there for you. And I know Stephen was talking about this. Basically, you can generate flyers. These are all standardized, customizable flyers for your listing. I mean, you can take them to your listings for your open houses, things like that. There's social media posts. Anytime we're running a refinance special, there's refinance special flyers that you can send out to your clients. We just ended a refinance special at the end of last month. And I'll touch on that. I know I brought it up in that quick little meeting last week, but I'd like to talk about it just a little bit here right now. We run refinance specials all the time. I'm not sure when they come or why they come, or I'm sure, maybe we've got some pipeline, that we can fill up and we've got people to work. So let's run a little special and get some more business in the door. We don't just do it for us though. The main reason we do it is for you guys. We run that special where we're discounting our rates even further and giving your refinance recommended clients an even better deal. And the reason for that is you guys are out there talking to your clients and your network all the time. People that you've sold a home 10 years ago, 5 years ago, whatever. People you've never sold a home for. They're just in your database. Okay. You guys have to come up with all kinds of reasons to talk to them, have a reason to talk to them. You don't want to just, be blasting out to your entire network saying, hey, remember me? You need a reason to talk to them. And so we devised the refinance specials so that you guys can actually provide a reason that you're reaching out to your client. It's not just to say hi and try to drum up business. You're saying, hey, look, rates are low. We have a tool that gets them even lower than the normal market rate. You should definitely try to take advantage of this. And you get all of these extra benefits, even though you're not buying a house with me this time around, you're just refinancing a house this time around. And the point of all of that is that you're going to send clients our way. We're going to close refinances and we will love you for it. But the biggest reason for you guys is that it gets you in front of them. You're now solidifying that relationship even further. And there are going to be plenty of times where that client says, hey, I'm not really looking to refinance because I'm going to sell in 6 to 12 months or 24 months. And boom, now you have that client on a tight schedule to making sure that you're getting that listing. And if they're buying in a more local market, also being their buyer's agent at the same time. It just helps you guys drive more of your business. There's ways to stay connected. There's a Facebook group. Again, the portal is the main source, which I can get out to everyone if they'd like to see what it looks like. If they do not know what it looks like, there's also a short little video that I have that can kind of guide you through sort of the buttons to press. It's kind of nice to be able to see it. Again, these are just some support emails. Again, this one that you see that's kind of got the life, life preserver or whatnot. That's the support hub. That's what I was talking about. If you've got something that's on fire and you need attention immediately, it's not just a black hole where, no one cares. Immediate action gets taken place. And so that's the end of the slide. And, so again, I just wanted to kind of run through all of that as quickly as I can. That's the gist of it. And like I've, kind of beaten to death here, we are built for you guys. We're here to save your clients money. We're here to streamline the lending side of the process, so that when we get 5 stars from not only you, but from the client, they are now more inclined to say, hey, I'm going to recommend all of you to my friends, my colleagues, and my coworkers and my family. And again, that's the main reason why we were built.
Totally. David, good stuff. I'm sure there's going to be some questions, already a couple in the chat. One question is, who does Keller Mortgage not work for, David?
Who do they not work for?
Yeah.
I'm assuming that means in terms of clients.
Right.
Um, someone who has a ton of investment properties and they are buying a bunch of investment properties. If they have too many, we're heavily tied to Fannie Mae, Freddie Mac, FHA, VA guidelines. We go based off of the guidelines. We don't have any overlays, but we go based off of those guidelines. So let's say, for example, you've got a client who owns, 10 investment properties and they've got mortgages on 7 of them. They want to buy another investment property. We're probably not the ideal solution for that, right? We're going to have to adhere to the guidelines of Fannie Mae, which means you can only have so many financed properties. And we're basically not going to necessarily be able to help that client out.
Right.
Another client, that one is probably a firm no for forever, but because that client should be working with a credit union. Honestly, they are primed for a credit union, because the credit union is going to use their own deposits and they don't care how many finance properties you have. Clients that we typically cannot help right now as well. Now, that's not to say this might not change down the road, but down payment assistance programs clients. So we looked into all of these programs across the country. When we first started Keller Mortgage, they actually, because it was set in Texas, they wanted to get a sample of what it would be like to try to help or try to utilize these loan programs. So they did it in Texas only. So if you got a lead through Texas, and they needed down payment, you could do it. After about a 12-month analyzing the success rate of these, who we were helping, and then looking at other states, because every state is a little different on what they offer. A lot of the programs were determined to maybe not be that good for the client. There are a lot of cons to those down payment assistance programs. In fact, the one in Ohio is absolutely atrocious. You have a second lien on your home basically forever. So you're not really and you pay about 1% higher in rate. So in Ohio, I mean, what you're basically paying for it yourself by paying a higher rate over time. So they looked at those and they said, look, we're not going to do these. It's a small part of the market as well. We understand that you guys want to help every client, and we want to try to help every client as well, but we just determined that just wasn't a loan product. Now, that might be something we change down the road, way ahead of my pay grade to tell you when or how or if that would ever happen. But it is still something that at any time they might be able to change if they determine that it's worthwhile. And then, again, usually if you're buying a house that's very dilapidated and somebody is trying to do a construction loan or like a 203K, we just do not have access for those. Those are very cumbersome loan files. They are very difficult to get finalized. The red tape on those are enormous. And there are niche lenders out there that specialize in it. And we are more than happy to tip our cap to them and say, hey, this is who I would use. If me as a lender, I would not use myself. I would use that specialized company that handles that one particular loan product or focuses on that one particular loan product. A lot of questions we get: can we lend on land? We cannot lend on land, and we cannot do like a construction, like a builder's loan. But we can do new builds. I know in the Northeast there aren't a terribly large amount of new build areas, but there still are from time to time. But yes, we can do a new build and obviously existing housing. So
Okay, great. Someone's asking about any incentives to refinance their own property.
Everyone gets the same deal. It's a blanket coverage for you. So it could be an agent who wants to refinance their own home. In fact, I've got I don't know if he's on this call, but Mr. Church emailed me yesterday.
He is on here.
Yeah, I can only see so many, so I don't know. Yeah. In fact, after this, let's talk, just because I do want to kind of go over. Oh, there I see Michael right in the middle. I do want to kind of go over some of those, some of the things you were asking about, but in total, you get the same discounts, right? There's no lender fees, $1,000 credit if the loan's over 150. We're going to order your appraisal right away. You never pay up front for that appraisal. That's another key aspect, specifically maybe for the refinance. It also, I love, it's one of my, I know it's a tiny little feature, but it's my favorite. I used to work for a lender that charged every client $500 deposit. non-refundable. And that was to pay for the appraisal for when, if you went through inspections and you didn't want to buy that house anymore and you backed out, it saved us the 500 because we took that 500 because we either already ordered the appraisal or whatever, just for our time. Apparently, I hated it. That's what it's such a small little piece, but I love it. I never have to ask a client for their credit card. I never have to send them a link to do it.
Yeah.
We're not waiting for inspections to order your appraisal. And one of the things is we never claw that money back. So let's say we do order the appraisal right away. Contract falls out, or if you're doing a refinance, let's say it comes in way under value, and now the loan terms that we originally thought we were going to get are now no longer lucrative. It's not worth it for you to refinance. That is something that we are committed to. We're not clawing that money back.
Right. I think that's a huge point, David. I think that's a real big point.
And it's not just there to I don't say it in a way that we want to, take advantage of it in any way. The reason why we're so confident in doing that, and this is more on the purchase side, not necessarily the refinance side. The reason why we can do that, and we're very confident, we close about 92% of every contract. So that success rate is enormous for a lender. I don't know if you guys know the context, but say a Quicken probably closes 40 to 50% of their contracts. Why? Because they throw everything at the wall. They hope that it sticks. And that's why you guys can't stand Quicken. You see an offer with Quicken as the lender, and if it's not the best, strongest deal on planet Earth, it's probably getting pushed to the bottom of the pile. Our success rate really the only reason we do not close loans is bad inspections or low appraisals that can't have if there's no negotiation after the low appraisal. Those are really the only times that we're going to have where we're not closing, or the client just gets cold feet. The cool thing about it is, if we did all of that work for the appraisal and we saved your client from wasting $500 that they would have otherwise wasted somewhere else, well, that's $500 that they still have in their pocket for their down payment. And if you've got a affluent client, they probably don't care, but a lot of clients aren't. And that $500 may mean that they can go right back into contract again, or not. Maybe they have to wait a month to save up more money because they're really tight on assets. It saves that. And that client comes back on an enormously successful rate back. So if you take the 8% we don't close, and I don't know these numbers, I'm just kind of speaking anecdotally from my own experience, they are back 2 weeks, a month, 3 months later, putting in an offer on another house. And I got to copy their file over. I know that it works all the time because I have to go in and do about 15 minutes of extra work on their file by copying it, moving all their documents over, and basically, I'm so sorry. And basically, just making sure that it gets redone properly. So I know that they're coming back, and it's just an enormous way to save their business and keep them in line with you guys as well.
David, what about agents logging onto the portal? Is it their KW password login? Is that
I believe so. Yes. I think you guys all have a single sign-on. And so, yes, if you're logging into that portal, it should just be your single sign-on, because everything kind of runs through that for you guys.
Got it. And what about clients with not stellar credit? What are the limits?
So, I mean, again, we're kind of stuck at sort of the norms in terms of these. We don't have any overlays, but we do just kind of adhere. We don't necessarily have any manual underwrite. Some lenders out there might specialize in what's called a manual underwrite. So, but in general, you're looking at a minimum 620 credit score on, basically all loan products. Obviously, USDA has a little bit higher threshold. I haven't seen a USDA loan all year though, so I know they're few and far between, especially in this market. But yeah, if your client doesn't have great credit, it's not to say that we're not going to at least do our best to try to help them, right? I've continually get, where someone has, let's say 570 credit, and they've got, a couple of judgments, and maybe they're overextended on their credit cards. We are by no means credit experts. No loan officer truly is. But, we've all been doing it long enough to know, hey, here are some of the points that we need you to work on. If you want to be a homeowner, you got to start getting that credit card balance down so that your percentage of credit card debt is lower. You've got to pay this judgment off so that this gets wiped off. And then hopefully over a quick or midterm amount of time, your scores are now up into, say, the mid 600s as fast as we can get them. And now we're on the path towards getting you into that home. So yeah, I mean, it's a matter of working with these clients as much as they're willing to work on it in order to get into a home.
Sure. Got it. Any other questions, guys? I don't see anything else in the chat. Feel free to unmute yourself if you want to ask a question of David. Nobody? You did a great job, David.
I have one more question.
Sure.
Oh, yes. Hi, Lydia.
Hi, David. Thanks for all the information. Was the jumbo rate recently added? Because I had asked, I think it was last year, and they said they didn't do jumbo for Keller.
I'm not sure who you might have been talking with, but for as long as I know, and I've been here, I was part of the second wave. So there was an initial like 14 loan officers. I was part of the second wave of loan officers that got hired on as soon as they turned this from a beta test, with only a select few group of agents, to where then they were adding it to a majority of the company.
Okay.
But we've always done jumbo. It might have been that the value was too high. Maybe it was above a certain threshold. I'm not sure, but no,
Okay.
we can definitely do jumbo. And I've actually seen it more recently where the jumbo rates are even better than the conventional loan rates right now, just because the jumbo market hasn't really moved up as fast as the conventional loan rates have gone up.
Okay.
Mhm.
And the last question is, how are you finding, how stringent are the debt to income ratios for the clients, let's say with, I don't know what particular bank Keller Mortgage is working with or something, because sometimes you have clients that go through their own banks and those are very restrictive. And then when they go through a mortgage broker, they're able to loosen up those ratios in order for them to make the cut. So I'm curious as to, do the programs that Keller Mortgage offers, is it a wide depth of that? Or are you seeing that people that are kind of borderline are being, is it really restrictive?
It is not. So I can speak to what you're talking about. I used to work for Chase, and Chase had an enormous amount of overlays. And what overlays are is, so let's just take a conventional loan, for example, right? There are strict rules on how to get approved for a Fannie Mae conventional loan. Okay. But it doesn't mean a bank can't add extras on top of that. So the debt ratios might be 50% and no cash reserves and credit scores of 620. That's the standard, right? Chase might go on and say, well, nope, we're doing 660 credit and above only. So we don't care about the 620 rule. And we're going to turn our debt ratio down to 43%. So if you're at 45%, we're not going to approve your loan. Those are all overlays that banks put on to kind of control the quality of loans that they're building, right? And I was a part of that. 43% was ingrained in my head. I have to keep telling myself over and over again, because I was brainwashed to think 43 was a real debt ratio, and it does not exist. It only exists at Chase. So that's what you're seeing when they come in at their own banks. We do not have any overlays. Okay. So if it gets entered in, there's an automated system called DU. It's desktop underwriting. Mm-hmm. That file gets underwritten by a human underwriter, verified by their income and their asset documents. Underwriting runs that automated desktop underwriter. And if it comes back approve eligible, we are good to go. Period. There's no extra overlays.
Okay.
Now, we had some overlays during COVID. That was very short-lived. And obviously that was a very unique situation last year during the pandemic. And every lender was creating overlays at that time. So it's not to say that there couldn't be, but the chances of us hopefully having another worldwide pandemic that drastically impacts financing, hopefully we never have to go through that again. There are certain brokers, and this is where, because again, if we can't get the deal done, we're going to recommend that the client going at least trying to leave no stone unturned, right? There are certain brokers out there that can do what's called a manual underwrite. We cannot do that. The percentage of market share for this type of product is very low, especially in this hot market, because, you know, if you're not really like overly qualified, the chances of getting successful bid right now are low, right? But there are certain brokers out there that have the ability to say, go in and do a manual underwrite where the desktop underwriter is not giving an approval. There's other languages that are contained within the system. And if it's hitting other languages like caution or other, you know, approved but ineligible, they can go in and do a manual underwrite and get a deal done. I would say though that the chances of you running into a client that fits into that mold, because it's a very tiny little window, is low. But we have no problem saying, hey, you know, maybe we need to get you in with, you know, another lender that Lydia knows that can do do something a little bit more less stringent, I should say, in terms of the underwrite review.
Cool.
Thank you.
All right, David, I put your contact info in the chat so everybody had it. And I know you mentioned having a little video, David, about navigating the portal. Can you send that to me?
Yes, absolutely. And then send that through to everybody. It basically, it's like, I think it's like a 3 or 4 minute video, and it just kind of guides you through, you know, what you're clicking on, and you can kind of see the actual interface of the Keller, the mortgage portal for you guys at Keller Williams, basically.
Okay, cool. Great. I'll send it out to everybody again with your info, so they have it there as well. But I think we're good unless anybody has another question. I want to thank David for his time today. It was very informative. No more
Thank you.
questions?
I think one more just popped in, did it?
Yeah. Do you see it, David?
How does it work for buyers with investor visas or work visas? So again, you know, I sorry if I'm sounding like a dead horse. So as long as it's Fannie, like on a conventional basis, as long as it's Fannie Mae approvable, so that I've worked with many clients with different types of visas. I couldn't the first time I was like, hey, are we able to close on this visa? Because it's a visa I'd never heard of before. And somebody sends me a PDF document straight from Fannie Mae on the visas they either approve or don't approve. I couldn't believe it. It's like 4 pages long of different visas. As long as that visa is on the approved list, we can get it done. And obviously, as long as, you know, they're meeting the requirements that are entailed to keep that visa active. So yeah, it all comes down to that.
Great. Sounds to me like it's like 98% of the cases are going to work, David, right? I mean,
98. Yeah, I love throwing out percentages. It's one of my favorite things. They're totally just pulling it out of the air. But yeah, I'd say like 95 to 98% of your clients we're going to be able to serve.
Right.
And, you know, again, we wanted to make sure we're serving them in the best capacity as possible. So by not doing little niche products, I feel like it does help us, because the attention that goes into, like, say, a 203K loan, I mean, that's going to dominate resources on our end, and that might mitigate, and that one file out of thousands, right, takes up all of these resources, and it jeopardizes our ability to then finalize deals that are the critical ones.
Yep. Gotcha. All right, guys, we're going to wrap up. We'll
I
send
see
you that
something.
additional information.
I see something about Spanish. We have Spanish LOs. Absolutely. I am not one, but if anyone needs one, I can easily get you in touch. We have a list. We just send it out, copy them on it. So if anybody wants to start working with a Spanish speaking loan officer, they can absolutely do that. And I have not seen it with my own eyes, but I would assume that all the brochures and everything there are Spanish versions.
Yes.
I would be absolutely shocked if there was not.
Yeah, there are.
They're in the portal, yeah.
Yep, I saw them myself too.
Yeah.
Great.
Question, Steve?
Yeah.
When if we give out a flyer or talk to people about Keller Mortgage, do we need a separate disclaimer that the companies are related? Or
There's an ABA that's already, the minute you send the link to a client, the first thing they see is an ABA. So
That's what I
you
would
don't have to
assume.
do anything manually yourself. It's already built into the system for you.
okay, great.
Yep.
Good question. All right, guys. Thanks so
Thank you.
much, David.
No problem, guys. Thank you
All
all.
right. See
I
you
appreciate
all.
your time.
Bye.
Thank you.
Bye.